So in this video, my goal is to get you started for the trading week ahead. Today is Sunday, so we're going to look at stocks that are in a long-term uptrend. I have 9 stocks. They're large cap stocks. They're in an uptrend for the last year, but they've recently pulled back. They're somewhere within 15% or so of their 30-week moving average or less. And it looks like they're getting ready to reverse and start going back up again. So keep an eye on news, because we're not going to look at news. And also if analysts come in and downgrade any of these stocks, that could push them down. So, or any bad news could push them down. So you got to have stops in on these. They look like opportunities for investors and traders. So I'm going to go ahead and get right into it and just get a pen and paper and write these down. I'm going to talk about how far away they are, the percentages to the top of their trend channel and the bottom of their trend channel. So the differentials, and you can decide on what profits you would take or not, or losses you would be willing to take on each of these stocks. In the description of the video, I will have a spreadsheet that has the risk to reward tab, that has the stop loss and take profit, and you can put in whatever you want for that. So let's go ahead and get right into it. The first stock we're going to look at is CrowdStrike. It is above its 30-week moving average. It has recently gone above, and then it recently pulled back, and now it's touching it. But the 30-week moving average is bending down, so that can be a bearish sign. But we do have volume, a lot more green bars than red bars over the last several weeks, as well as relative strength versus the market. But we have a lot of volatility with CrowdStrike, at least recently. And we're going to compare this to the Qs. The Qs are in a long-term uptrend and well above their 30-week moving average. So now we'll look at the trend channel. I have this on a 90-day time frame, the MACD, and I have the trend channel on a 1-year time frame. So these do not correlate with each other when you're looking straight up above from one another. This is only 90 days of data. This is 1 year of data. We are at the bottom, below the middle of the channel, close to the bottom. We have a MACD that's converging, but has not crossed the signal line. So just keep that in mind. That's the daily MACD. We have 22.41% of upside to the top of the channel, and we have 11.95% of downside to the bottom of the channel. Now that's not a perfect way to do stop losses and take profit, but it's just it's a guide. And just keep in mind, if this stays in an uptrend, these numbers will go higher. The 379.67 will continue to go higher, and the 273.09 will continue to go higher. Every day they will get higher and higher in the price. But you also see that this has gone above its its trend channel and below it. So that just also tells us that it has been very volatile recently. Let's look at the 30-week chart. So on the 30-week chart, we're in an uptrend, but we see the bend here. But more importantly, the MACD for the last 5 weeks has been open. From last week to this week, it has converged slightly, but it's still open quite a bit. So that's, I would say, is a bullish signal. We want to see this continue to go up. That's on a more of a longer term time frame. And all these trades, you should be considering these on weeks to months, even if you're trading them and not investing in them, time frames, and then have your stop loss and take profits in them. I don't do things on a daily time frame. I do look at daily charts, and I do look at price action throughout the week, but I want to know what's happening on a more larger scale. So the next stock, that's it for CrowdStrike. This is probably one of the more volatile ones and more of a riskier one that we're going to talk about. The next stock is going to be Chipotle. So Chipotle is on more of a smoother uptrend, and the 30-week moving average, even though it's starting to curl a little bit, is still moving up, and it has just crossed back above its 30-week moving average. Over the last several weeks, we do have more green volume bars than red volume bars, so that's good. That means we have more buying than selling week after week. It is showing relative strength, but not quite as strong, volatile at least, as CrowdStrike was versus the market here. Or, if you go back to here, we had outperformance of 1.3%, then 5%. And then from after that, it's been pretty even. So over this time frame, this is really where you got the outperformance. If we look at the trend channel, we're in an uptrend, but we're near the bottom. We have a daily MACD that is converging, but it has not crossed. We have the lower trend is the downside to the lower trend channel is 7.11%. The upside is 8.04%. If we go to the 30-week chart, We are in a long-term uptrend. You can see we're starting to go back above. This looks like a good entry point to me for Chipotle. Low risk, high reward. And for the last 5 weeks, we have an open MACD and it's continuing higher each week. So that's very bullish. So I really like Chipotle for a safe bet, but that doesn't mean that things won't go against you. So just keep that in mind. You still want to have stops in there. Our next stock is going to be Waste Management. Same thing. This looks like it's in a smooth, nice uptrend. A little bit of a bend in the 30-week moving average. We have volume bars more green than red over the last several weeks. I'm not sure if we have relative strength because we had some really downtime here, but over the last 4 weeks we do have some relative strength because we had negative 0.20% of underperformance versus the Qs 4 weeks ago, but then the last 3 weeks it has outperformed. We go to the trend channel, we can see we're in an uptrend with the lower trend, the price near the lower trend channel. We have 11.55% of upside to the top of the trend channel. We have 4.01% to the bottom. We have an open MACD, but it is starting to pull back into the signal line. If we go to the 30-week chart, same thing, it's in a nice long-term uptrend. The reason I like to look at this 30-week chart is because I have it labeled, and you can see every week the price has gone up. I can't see the one all the way to the right, 208.59. So it went from 208.52 to 208.56 to 208.59. So every week for the last 30 weeks, the red line has gone higher. That's bullish. And now the Waste Management is just above the red line. So that's a good thing. And it's just crossing the MACD is just crossing the signal line. It went from 0.27 to 0.77, so it's trending higher on it, and it's just crossed. So this might be a good opportunity, a low risk, high reward trade. So it's just something to look at. The next stock we're going to talk about will be Amazon. So Amazon is also in a smooth uptrend. We did have a pullback here. You can see this would probably have been a good time to enter Amazon. We do not have as much volume bars that are green versus red. Over the last several weeks, we actually had a lot of sell-off here, and that's what pulled it below its 30-week moving average. And now 1, 2, 3, 4, 5, 6. Over the last 6 weeks, we do have 4 out of 6 that are where we had more buying than selling, but that's not real strong. We really don't have outperformance recently. We did right here, but then we had a pullback, so it went up higher here, but now it's recently pulled back. So those are some things to look at and pay attention to, but we are still in an uptrend and above the 30-week moving average. In the trend channel, we're at the lower end of the trend channel. We're actually below the signal line, and it looks like we're getting ready to cross on the daily MACD. So that's a bullish sign that we could be going higher. So that looks good for Amazon. I don't know if I mentioned this earlier in the video, but we have I've added a stop loss here that you can click on, and you'll have this in your spreadsheet. So whatever you want to put it below the 30-week moving average. So right here, I have it at 10%. So that's $165. That's where your stop loss would be if you put it at 10%. And you can change it. I have anywhere from 0 to 100% in there. So whatever you pick, that will just give you the number for a stop loss below your 30-week moving average, that percentage. Let's look at our weekly MACD. We are open, and we've been open for the last several weeks. However, we are starting to converge back together on a longer term time frame. So this stock is above its 30-week moving average, but it's kind of on a longer, it's showing a little bit of weakness. It's one to look at. I like Chipotle and Waste Management better, but Amazon is one that has a possibility for a trade or a long-term investment. So then all we're looking at here, all I'm doing here is looking at technical analysis. There's other things to look at if you're investing in this for long term. This is just, is this a good entry point for quick moves? And you can hold these for years if you want. If Amazon's a great company, if you want to hold it for years, that would be fine. I'm just looking if this is going to turn and go up over the next week to several months. The next stock will be Amgen. This has been well above its 30-week moving average, and it's a strong stock and a strong uptrend with a nice pullback. And we have some recent selling, but that's what happens when you get a pullback. But we're still in a strong uptrend, and I would say it's kind of just back and forth with the market. So sometimes it outperforms and then underperforms. Probably, if you go from here to here, it's probably about right in line with the market with the Qs. The trend channel This is a tighter trend channel, so there's not as much of upside or downside. You know, it's a little bit lower risk, and you're not going to get as much probably from it. We are underneath the zero line with a cross on the daily MACD, but we are converging back together. You can see here, but we have not crossed below it. We have 10% of upside on the 30-week moving, or excuse me, to the top of the trend channel, and 4.64% of downside to the bottom of the trend channel. 30-week chart, we can see this is not, we're above the 30-week moving average, we're pulling back. We have a MACD that is broken down here. So this is on a long-term time frame. We may want to wait on this one and wait until maybe next week, but it's one to keep on your radar and see if this reverses and goes up higher. Or you can watch the price action during the week. If we get relative volume and this starts to go higher this week, then you might want to take an entry. So that's stuff to keep an eye on. Also, in the comments below, let me know if you want me to do videos during the week where I have relative volume and stocks that are going up, and I'm doing that pretty much live. Google Sheets isn't quite live, but it's on a roughly 15-minute delay, and that relative volume and the price that goes up from the day before and the open today of that day is within a 15-minute time frame. So if that's something you would like me to do videos on that you can keep, so you can see what stocks are moving up throughout the week, let me know. And just leave a comment below. So now we'll get into the next stock. Our next stock is Vertex Pharmaceuticals. This is in a long-term uptrend, very strong. This would have been a great entry point right here. When you see a chart like this where the 30-week moving average is moving up and you get a pullback where it's just touching it, that is one of the best entry points in my opinion. But we have gone back up over the last 5 weeks. We do have more sellers than buyers, but that's what caused the pullback, right? That's what causes your pullback, and this acts as a level of support. We have some high volatility here because we got stretched and then we came way back down. So here we were at 494, and that was on August 2nd, and then we came all the way back to 454, and now we're back up to 483. So you can see we have some zigzag up and down of the strength versus the market. And it actually looks like it is underperforming the market over the last several weeks. If we go into the trend channel, you can see we're in an uptrend. We're right somewhere in the middle here, but actually a little bit on the downside. We have a converging MACD, but it is open, and it has opened below the zero line. So I'd like to see this turn back up and money come back in. I'd be paying attention to this during the week. I may have mentioned this earlier, but if you want to take an opportunity on these on Monday, you don't have to go all in. You can always buy like a third or half, and then if the market overreacts at some point during the week, then buy another third or a half, and then put your stops in after that. There's no wrong way to do it. It's up to you. It's what you want to do, whatever you want to do. If you put a 10% stop below the 30-week moving average, that'd be $412.93 for your stop. If we go to the 30-week chart, we know it's in a long-term uptrend, and the 30-week moving average has been just trending up over the last 30 weeks, and it is getting ready to cross on a long-term time frame. So this is maybe a good opportunity. I would be watching this one during the week, and if we get some relative volume, especially later in the week, I'll know that it's crossing, getting ready to cross. That this will probably cross because it's on a weekly time frame. I won't be able to see if it crosses until next week. But if we get some relative volume and the price is going up, I know that it will be crossing next week, and the price should be going higher. So just keep that in mind and keep an eye on that. And the next stock we'll talk about is Costco. So Costco is in a very smooth uptrend, just riding right along its 30-week moving average. Its 30-week moving average is trending up. This is a strong stock. This is a great long-term investment. As far as like valuation, this company is always overvalued, and it's for a good reason, because it's a great company. We have had some selling, some pullback, but I think this is where we get our opportunities, right? We need this selling here to get an opportunity in a great stock like Costco. Our trend if we go back, we underperformed the market obviously with that selling. So if we go back to it now, if we go to our trend channel, we have 16% of upside to the top of the trend channel and 7.4% of downside to the bottom. Our daily MACD is looking like it's getting ready to converge and go above this the signal line, and we're right around the zero line just above it. So this is a good entry point by what I see here for the daily MACD. If you wanted to use a 10% loss below the 30-week moving average, that would be $747.39. If we look at the 30-week moving average, this chart, we can see that the price has just trended up on the 30-week over the last 30 weeks. Every week it's higher, and the price action has stayed above the red line, the 30-week moving average. We do have a bearish MACD, but on a short-term time frame, it looks like we're going to turn, and I'll be watching this throughout the week to see if I think that this is going to be moving higher into next week and crossing back up. So this is one to keep an eye on, and you want to watch the price action throughout the week and see if you get opportunities for entries. Now we're going to look at TransDigm. That is on a long-term uptrend. We had some pullback here, and you can see, so when we had this pullback, you had a lot of selling, but then it just went right back above its 30-week moving average. So as long as our 30-week is in an uptrend, this selling shouldn't concern you too much. It should just you should consider that as an opportunity. Now we're back into a long-term uptrend, and we have some more selling. But if we look over the last several weeks, if we go from here, where my cursor is, to over, we actually have more buying than selling. We have some up and down performance here. You know, it goes up, and then it kind of does nothing, goes up a little bit, and then down, and then up. So I would say it's probably about in line with the market, roughly. You know, I'm not doing the exact math, I'm just eyeballing. If we go to the trend channel, we have a MACD that is converging here and getting ready, hopefully, to cross back above the signal line. We have a uptrend channel. We're in an uptrend we have 14% of upside to the top of this channel. We have 8.6% of downside to the bottom of the channel. If you were to put a 10% stop loss in this, it would be $1,169.74. If we look at the 30-week chart, we can see that's gone up every week for the last 30 weeks, and it's continuing to do so, along with the stock being above the 30-week moving average. So this is a fine long-term investment based on that. This also, you can see this crossed the weekly MACD crossed here about 9 weeks ago. It crossed right here, and it went up, and then it came down, and it looked like it was going to cross below, but it bounced, and then it came down, and it's just going right along it. So this may go back in this direction. So just keep that in mind. Watch the price action throughout the week. If the market sells it off, it's probably an opportunity for you to get in, you know, and then put your stops in there. So just pay attention to these stocks and see what the market's doing and take advantage of when they sell them off. And if you want to take profits when the market's having a good day, take your profits. But you're probably going to hold a stock like this for months, several months to maybe longer, until it breaks down. So the last stock we'll look at is Eli Lilly. Same thing. We've had a little bit more selling than buying over the last few weeks, but that is just giving it a pullback. So you do have some underperformance. You had a couple weeks of outperformance before the past week. We've recently just pulled back. We are in a uptrend and above the 30-week moving average. We have crossed right here on the daily MACD, but it's real tight, and it is looks like it's going above the zero line, so we want to see this continue up. We have 18% of upside to the top of the trend channel and 8% of downside to the bottom of the trend channel. 10% loss in this below the 30-week moving average. 10% below the 30-week moving average, not a 10% loss in the price. If you were to put a stop in 10% below the 30-week, that would be $768.09. On a 30-week chart, you can see every single week for the last 30 weeks, the 30-week moving average has trended up, which is bullish, and we've stayed above that 30-week moving average, which is also bullish. We are starting to converge back on a weekly time frame. Maybe we'll cross here next week. So it's something to keep an eye on, and we need to watch the price action. If we get any moves near the 30-week moving, none of these are that far away from the 30-week moving average. So if we get any moves where they get pushed to the 30-week moving average, those would be the times when you want to get into them. Or if they get slightly pushed down below them, then put your stops in and hope they go up. If they don't go up, you get stopped out of them and you protect yourself. All these have higher than 1.5 to 1 risk to reward ratio. Actually, I believe most of them have a 2 to 1 risk to reward ratio for the upside if you're willing to hold them long enough. You know, you either need to invest in these or you need to trade them on a longer term time frame, probably like several weeks to maybe months. You know, you need to hold these for a while. So that's how I do it. I hope that was helpful. That's all I really got. If you like that video, if you want more videos like this, let me know. I kept this to conservative stocks this time because I didn't know how well this will be received, or if people would want to watch this. So if you want more videos like this and you want me to get into more speculative stocks that don't have as good of fundamentals as these ones do, let me know. And thanks for watching. If this helped you at all, or if you have found any value in this video, consider hitting the like and subscribe button. Thanks.